On Wednesday, during the Asian trading session, spot gold broke free from the selling pressure of the previous trading days and maintained an overall strong oscillating trend. Market attention was fully focused on the U.S. non-farm payroll report to be released today. Before the data was released, investors generally maintained a cautious wait-and-see attitude, and gold prices did not show an obvious one-way trend. The short-term trend still needed further guidance from key data. Market expectations for the Federal Reserve to cut interest rates at least twice this year, 25 basis points each time, combined with the long-term positive factors of central banks around the world continuing to increase their gold reserves, offset short-term selling pressure and drove gold prices higher at the opening earlier. The flat U.S. retail sales in December triggered concerns about economic slowdown, further strengthening expectations of interest rate cuts. And interest rate cuts will reduce the opportunity cost of holding gold, indirectly supporting gold prices. At the same time, the U.S. dollar index was flat and did not rebound significantly, exerting limited pressure on gold prices denominated in U.S. dollars and helping it oscillate upward. The U.S. non-farm payroll report to be released today is the core factor affecting the short-term trend of gold prices. The market expects the United States to add 70,000 jobs in January, much higher than the 50,000 jobs added in December, with the unemployment rate remaining unchanged at 4.4%. If the data meets or is lower than expected, it will further strengthen interest rate cutting expectations and be bullish for gold prices. If the data is significantly higher than expected, it may weaken interest rate cutting expectations and trigger gold price selling. Affected by this, investors remained cautious and waited, with insufficient trading volume restricting the further rise of gold prices. From a technical perspective, spot gold is in a short-term strong oscillating phase with delicate long-short gains. The RSI index operates strongly in the 55 to 60 range without obvious overbought signals, indicating that short-term bullish momentum still has certain upward momentum, but limited strength. The red column of the MACD indicator extends. The momentum column expands gradually. The downward momentum fades, and the bullish momentum recovers, suggesting that the short-term strong oscillating trend is expected to continue. Support levels. Short-term focus on $5.27 near the short-term moving average with certain support. Strong support at $5,000 psychological level and important support level. If this level is broken, gold prices will decline to test around $4,987. And if further broken, it may test around $4,935. Resistance levels. Short-term focus on $5,080 upper edge of the recent consolidation range. If it is difficult to break through, it will maintain oscillation. Strong resistance at $5,100. A breakthrough will break the oscillating pattern and open up further upward space. All content is for reference only and does not constitute any investment advice. If you trade based on this content, you should bear your own profits and losses. Please subscribe, like, and share. Thank you for watching.